Hi everyone, it's Christophe Choo from Coldwell Banker Global Luxury Real Estate in beautiful Beverly Hills, California. It's March the 7th. It's hard to believe, I don't know about you, but already being in March of 2019, gosh, how time flies. And for many of you that follow me, you know I've been selling luxury real estate and real estate in Los Angeles, Beverly Hills, and the Westside for over 31 years now. Hard to believe that much more than half my life I've spent selling real estate. But I love what I do. This is my monthly market report, and this is a little bit longer, probably the longest market report I've ever done on video. But there's a lot going on in the marketplace, both in Los Angeles, in the luxury segment, the lower end segments, nationally, and I've just been to two recent conferences where I got a lot of very valuable information. So I wanted to share what's going on, which is beyond the headlines you read. You know, you read the headlines in the Wall Street Journal, the New York Times, and LA Times, and the more salacious, the more nasty and scary the headlines, the more people that will click online to read those articles. So, you know, people in the media do create these headlines to make you click and watch their videos or read their articles. So mine is the real deal, what's really going on. You're going to watch it or not, but I'm going to give you the real deal. So I'm going to talk a little bit about the luxury market in LA, what's going on. Then nationally, and I have on my computer, I may be looking a little bit, I have lots of slides that wonderful Steve Harney gave me so I could kind of recap what we talked about and what's going on nationally, and are we going into a real estate recession? Are we headed to another market crash? These are all questions that have been definitely high in the eyes and the minds of buyers since, I would say, September of last year. Now, I started talking in my videos a year and a half ago, summer of 2017, and I said, guys, the market's changing. I'm seeing too many particular kinds of houses. The prices were too high based on the marketplace, and I just knew that was going to be an issue overall, and that has actually come to pass. And when I look back at my 10, 11 years of videos where I talk about what I see going on in the marketplace, quite often, and actually most of the time, what I predicted and said is actually what happened. So let's talk about what's going on now and what are the predictions for the future. So first of all, I'm going to talk about the luxury market here in the Los Angeles area. Let's start with 2019 right now, what's going on. So in our market, again, here in Los Angeles and Beverly Hills, luxury starts at $5 million. Now, other areas could be 500,000, 700, but here in LA, 5 million is kind of the starting point of luxury. Ultra luxury is over 40 million. So what is going on? So right now, so far in 2019, for $10 million plus homes, there have been 15 closed sales so far this year versus 16 in 2018. So right now for January, February, and March, or January and February, we're pretty much right on par with the marketplace in 2018 in terms of the number of sales. Now, let's go back and do a little recap of what happened in 2018. So let's start with the highest price point first. So in 2018, over $40 million, there were 9 homes that sold and closed in Los Angeles, Bel Air, Beverly Hills, for over $40 million, 9 sales. Now in 2017, there were also 9 sales. So we're right exactly on par year over year, 2017 to 2018, and we'll get later on to what's going on in the $40 million market so far this year. Now currently in that particular price range, there is a 36-month supply. Now what I've seen in the $40 million plus range, a lot of sellers got kind of carried away with pricing, and some of these homes over 40 million have been on the market a year, 2 years, and that's not uncommon. Even in the best markets, homes at 50, 80, 100 million in our marketplace could take a few years, 2, 3, 4 years to sell. So not surprising, but there is currently a 36-month supply of inventory. And many of homes that we've offered on a year ago in the high-end marketplace are still for sale and are in some cases listed for less than offers my buyers made on those homes a year and a half ago. So interesting. So I would say in the $40 million plus segment, if you're looking to buy that kind of property, that's probably one of the best opportunities to buy and get a really, really good deal today in the Los Angeles marketplace. Okay, so 36-month supply on par 2018 versus 2017. Now, 30 million plus changed a little bit from the year before. There were 19 sales in 2018 over 30 million versus 23 in 2017. So that market in terms of number of sales was down about 17%. And we currently have about a 28-month supply of inventory in the $30 million plus range. 20 million plus. So there were 43 sales in 2018 versus 52 in 2017. So again, about the same, down about 17% in the number of volume of sales. And there's currently a 13-month supply. So again, 28-month supply in the $30 million range, 13-month supply in the $20 million range, and then the $10 million range, it changes yet again. So $10 million plus, what's going on? So in 2018, there were 157 sales over 10 million in 2018 versus 185 the year prior in 2017. So that's down about 15%, and there's currently about a 12-month supply in the $10 million range. So the lower the price range, the shorter the supply. At least that's in the Los Angeles luxury marketplace. And we're going to talk about national supply also at the end of this video. $5 million plus. So we had, hard to believe, there were 580 homes sold in Los Angeles, Westside, over $5 million in 2018. That's a lot of people that have a lot of money to buy $5 million homes. One of my friends in New Hampshire said to me the other day, do you realize that $23 million buys you an entire town or the whole state of New Hampshire? Anyways, this is LA. What can I tell you? So 580 sales in 2018 versus 602 in 2017. So the volume was only down 4% in that range. And there's only an 11-month supply. So right now, our sweet spot is really under 5 million. I would say anything under 5 million that is well priced because of lower inventory. Still a lot of buyers out there. That's this sweetest spot in the marketplace right now. So I think we covered, 40 million, 30 million, 20 million, 10 million, and 5 million. Okay. Now, in 2018, of the 43 sales over 20 million, what percentage are Americans versus foreign? Now, it's very interesting. In the last 4 years, I have seen an increase in the number of American buyers and a decrease in foreign buyers. I do think that Trump, with a lot of the things going on, the international economies, we've seen fewer international buyers than a few years ago, particularly in the Chinese segment of the marketplace, whereas I think 3-4 years ago, 40% of the international buyers were Chinese. Today, it's more like 10 to 20% because it's a little harder to get the money out of China. China's been cracking down on the ultra-rich and their money and taxes. There have been lots of stories about that. So that's been changed. So basically now over 20 million, 79% of all the transactions in LA last year were sold to Americans. The remainder of the buyers were 9 foreign buyers, 1 from China, 1 from Monaco, Australia, Saudi Arabia. We had not seen any Saudi buyers buying at that level in a few years. Swiss buyers, Japanese buyer who bought an $86 million house in Bel Air. British buyers are always coming to LA. Canadian buyers are always buying. And we had 1 buyer from South Africa last year. So still a very international marketplace, but definitely not as strong as it was a few years ago. So I'd say the international buyer segment has dropped about 10% in the last few years. So what are the hottest neighborhoods selling over 20 million in Los Angeles and Westside in 2018? So Beverly Hills usually always tops the spot. There were 12 sales over 20 million in Beverly Hills. And let's face it, everybody in the world has heard of Beverly Hills and Rodeo Drive. So that's just an iconic name, and people, particularly foreign buyers or anybody who wants to show that they've made it and they're buying a house in LA, they prefer to be in Beverly Hills. So 12 sales in Beverly Hills. Malibu was very, very popular last year. There were 9 sales in Malibu, and the highest sale price in the history of LA sold in Malibu for $127 million last year, new construction modern home. There were 5 houses in Bel Air. Bel Air is continuously popular. 5 in the Sunset Strip, 3 in Holmby Hills. We have what we call the Platinum Triangle here in LA. The Platinum Triangle is the foremost luxury markets. That's Beverly Hills, Holmby Hills, and Bel Air. That's the Platinum Triangle. So consistently, Beverly Hills, then Malibu, Bel Air, Sunset Strip, Holmby Hills, those are the hottest areas in 2018, over 20 million. There were 3 sales in the Beverly Hills post office area over 20 million, which is, I don't believe there were 3 like that the year before. Beverly Hills Post Office is part of the city of Los Angeles, but it's called Post Office because you get the Beverly Hills, California 90210 address. Prices are about 30 to 40% less than the city of Beverly Hills, but your police, your fire, your services are all from the city of Los Angeles versus the city of Beverly Hills, which is not as good as the city of Beverly Hills. Beverly Hills has long been known for the finest police, fire department, and city services in the country, if not the world. 3 were in Pacific Palisades. We had some really, really high sales in Pacific Palisades, and 3 in Brentwood over 20 million. So Palisades and Brentwood really had some big, big deals in 2018. So what else is going on? 2017, I want to go back a little bit just to give you some reference points. 2017 and the $10 million plus sales was 185 in that year, and it was a 15% increase, but a 393% increase over the last 9 years. So 2007, there were 47 versus 185 in 2017. And again, we dropped a little bit down to, what were we in 2017? We were at 185. So not much of a difference, but still a little bit of a change. So let's compare now what's going on so far this year. I will tell you that September, October, November, and December, and the first part of January were some of the slowest winter months I have seen in a long time. And doing this for 30 years, having been through 2 down markets, typically our November, December are very strong for the international buyers. They still came for the holidays, but they weren't buying so much this year. So that was kind of interesting. And overall, the market slowed down. People started reading and believing the headlines. Interest rates went up. So people were taking kind of a breather those months. But things have really changed a lot since about mid-January. So again, let's talk about what's going on so far this year versus last year. So 2019 now versus 2018 before was what happened all of last year versus the year before. So $5 million plus sales in LA. There have been 39 so far this year versus 52 in 2018. So that's down about 25% overall number of sales. There are currently 34 under contract. And I do believe that's because we didn't have a lot of opened escrows in November and December, and they started picking up mid-January, and I've noticed a big, big change in February. Houses that weren't getting showings or offers back in November, December are now all under contract and getting lots of activity. So big change on that. $10 million plus, there are 15 sales so far this year versus 16 in 2018. So we're pretty much right on par with last year. $20 million plus, we're actually over and above the marketplace last year. 5 closed so far this year versus 4 in 2018. So we're up 25% in that marketplace. $30 million plus, there's been 1 sale so far this year, and there was 1 sale at this time in 2018. So overall, the market, particularly in the higher end, is also very strong right now versus what happened at the end of the year or in 2018. Now, $40 million plus, there have been no sales so far this year, and I don't think there were any at this time last year as well, but there are currently, interestingly enough, 2 land deals under contract pending in Bel Air over $40 million. Now, the developers aren't buying so much to buy, tear down, and build. I think that market's kind of changed, but the buyers are still buying to build for themselves. So the dynamics change. People are still buying, a lot of buying, but they're more owner-users today versus 2 years, maybe even a year and a half ago, where the investors were snapping up properties like crazy to tear down and build. But with the cooling of the marketplace, I think they're a little bit more cautious and shy. So of the $20 million sales so far this year, where are they and what are the hot markets? So, of course, Beverly Hills is number 1. Bel Air so far this year is really, really popular. There are 3 sales in Bel Air closed already. Now, overall, last year in Bel Air, sales were down 50% and prices were down overall 19%. The highest sale was $88 million to the Japanese investor, and the lowest sale was $2.3 million. So Bel Air is one of those neighborhoods that's a really best buy opportunity right now. Bel Air is a great buy opportunity. Beverly Hills Post Office is also a great buying opportunity, particularly in the $3 to $10 million range in both of those markets. So if you're looking to buy a house, let's talk about the areas, because different areas have different buying opportunities. Now in Beverly Hills City, not much out there. I have a buyer looking for 5 to 10 million, and there's really nothing good out there for him to look at. So, but in other areas, there's a lot of opportunities. So wherever there's strong demand, little supply. Where there's lower demand, there's more supply. So that's why, you pick and choose where you want to buy. And overall last year, about, I think it's almost 42% of the houses over 20 million were sold off market. That's one of the highest percentages I have ever seen. And overall, right now this year, so far, the number's a little bit less than last year. Last year it was 79% were American buyers over 20 million. This year it's 75%. So it's dropped a little bit so far. And I think things are easing with China and the US right now, hopefully, and international markets. So I think we're going to see a little bit more, a stronger buyer pool from international buyers this year than we did last year. Also, the Brexit, and there were some destabilizing things going on. I had a British buyer that backed out of a deal because of the changes in the economy and the Brexit and all that. So, but I think there's going to be more and more international buyers coming this year. Okay, so that's the LA luxury marketplace. But let's talk. I was at the Tom Ferry conference a few weeks ago, and Steve Harney, who owns a company called Keeping Current Manners, really consolidates all the information. It talks about what's going on nationally. Are we heading into a recession? Are we going to have another crash in the market like we did? Because some of these headlines talk about, oh, the market's crashing. It's not crashing. That's not the reality. Let's talk really about the reality. And I'm going to be looking more at my screen because these are slides that I have saved to give you all this data. So, first question is, are experts predicting a recession in home prices over the next 4 years? So this are the predictions for price increases over the, and I said increases, because people think the market's crashing, the market's coming down, but the experts predict that 2019, no, this is a national, these are national numbers. The experts are predicting that overall in 2019, home appreciation in the US will be about 3.8%. In 2020, they're predicting 2.5%, 2021, 2.5%, and then 2022, 3.3%. So that's the current predictions for the increase in home values overall. Now, in our luxury market, we've seen a large decrease in asking prices, and that's simply because, and headlines read, price slashed 40%, price slashed 50%. Well, since I've been tracking the luxury market, it's very, very common. In the luxury market, how do you price a $100, $200 million house? You really can't. There's no comps, or very few comps. So sellers ask what they want, and hopefully someone will buy it. So there's a lot more differential in the listing to selling prices in the ultra luxury marketplace. That's why we're seeing a lot of reductions, because buyers are a little cooler on that market, so they're more price sensitive, and sellers really just honestly just got a little greedy and asked too much for their homes. Whereas I know many properties that they had asked, 22 million a year and a half ago versus 32 million, they would have sold for 20 million. But today they're at 22 and they're going to sell for 19. Because if you're on the market for a year, 2 years, people think, what's wrong with the house? Why hasn't it sold? It's going to be a lot harder to get top value. There's a house, I won't discuss where, that I can give you many stories, but one I interviewed for the listing almost 2.5 years ago now. They wanted 45 million. I told them very clearly it was worth in the low 20s. They just did not even want to hear about that. And today it's listed for 24 million. But on the market almost a year and a half. They've been through 5 brokers. And unfortunately, I have a feeling today they might only get 20 or maybe just under 20. Whereas had they priced, I think actually now that I think about it, at that time there was an offer for 26 million. I told the owner to take it even though I didn't have a listing. Well, they didn't, and now they're on the market for less than that. And I can tell you many stories of sellers that had offers for more that didn't take it, and now they're sitting on the market for less than what they were offered a year ago, 6 months ago, etc. I'm looking at a chart right now that talks the probability of home prices being lower in 2 years. So it's a chart that basically shows the entire United States, and there's no state in the United States that shows a probability of lower home prices. The only state that in 2 years might have a moderate opportunity for lower prices is the state of Alaska. The rest of the country is minimal to low risk of lower prices in a couple of years. Interesting slide I'm looking at right now. When will the next U.S. recession begin? People are all talking about, there's going to be a recession, the market's going to crash. Well, none of us really see that. But this is a survey of Wall Street Journal Survey of Economists, Pulse Economics Survey of Real Estate Analysts, and Duke Survey of Chief Financial Officers. So this was a very interesting chart. So what are they saying? When will the next recession begin? So this is a percentage of people that say that. So for 2019, the range is 8% to 47% of these economists believe we're going to have some kind of start of a recession this year. Now, the numbers jump up in 2020 to 33 to 59%. Then it drops down again. Then it goes in 2021 between 9 to 22%, 2022 3 to 9%, and then 2022 at the end of 2023 1 to 7%. So I know from all that I'm hearing, if we have a recession, it's probably going to happen towards the end of this year, beginning of the next year. However, if you look and study the recessions in the last 30 years, recessions in the economy do not equate to trouble in the real estate market. When Steve talked about that in great depth, it was very interesting to look at the data and see that information, because people think, oh, recession in the US does not mean we're going to have a recession in the economy or in the real estate economy. So interesting information. Excuse me, this is a long video. Home price movement during the last 5 recessions. So this was an interesting chart as well. So in the January 1980 through July 1980 recession, home prices went up 4.5% during that recession. In the July 1981 to November 1982 recession, home prices went up 1.9%. The July 1990 through 1991 recession, home prices went down less than 1%, 0.09%. And down in March of 2001 to November 2001, during that recession, home prices increased, as a matter of fact, 4.8%. Now, the only time that the home prices dropped significantly was in the last recession, or almost depression. We had the market crash between 2007 and 2009. Where home prices declined overall 13.9% in the US. But one of the interesting statistics about that, which I think I have a slide, is at that time in the marketplace, most of America did not have a lot of equity. And I think I have the slide. In today's marketplace, I think 48% of Americans have over 45% equity in their homes. So even if the recession occurs, there's a lot of equity in real estate, so people aren't going to walk away and lose their houses, which caused the prices to drop in the last 2007-2008 recession. So interesting. And this is real data. So what's going on with inventory levels? So January, February, March, April of last year, inventory went up across the U.S. from 3.4% up to about 4.3% through September, October. Then starting in November, December, inventory started going down across the U.S. 3.9%, and then down in December to 3.7%. So we're seeing a decline in inventory. And in terms of home appreciation, this is a pretty interesting survey. And this is from, let's go survey from each person. It's the projected home price appreciation for the U.S. in 2019 and 2020, based on 4 different key sources. So the home price expectation survey is saying that home prices will go up 3.8% in 2019 and 2.5% in 2020. Zelman & Associates predicts 3.5% increase this year and 3.3% increase next year. Mortgage Bankers Association is predicting 4.5% increase in the U.S. this year and a 3% increase in 2020. Freddie Mac is a 4.1 projected increase for this year, 2.7 for 2020. The National Association of Realtors is a little bit more conservative. They're predicting 2.2% increase this year and a 3.2 increase next year. Interesting, I thought. They're the only ones that show a higher increase next year versus this year. Fannie Mae is predicting 4.2% this year and a 3.8% increase the following year. Now, there was a survey done of what will home prices do in 2019, and they surveyed 100 economists, market analysts, and real estate experts. 94% said there's going to be 94% said there's going to be appreciation in our marketplace this year. 4% say the market's going to depreciate, and 2% say no change. And by the raw numbers, 94% of everyone surveyed said the real estate prices will increase in 2019. And it seems to be the case so far. So here's a little thought I read that Steve talked about from Ralph McLaughlin, CoreLogic's chief economist. And CoreLogic is a company that surveys data all across the U.S. and tells you what's going on in the marketplace. But I thought this was very well said. My best guess is the housing market really comes into a soft landing. Depends on whether buyers and sellers start to panic as the market continues to slow, especially given how fresh the memories of the 2008 crash are. Markets often follow animal spirits or psychology. Sometimes a soft landing is perceived as a crash. So all these headlines of a crash, it's nonsense. There is no crash. Things have cooled in certain segments, but they're picking up again. And the interest rates went down, and they predict there's not going to be any increase in rates for the next 6 to 12 months. So I think that's helping the market overall. So year-over-year change in price. So what they're predicting for this year versus last year is that the lower price ranges will increase by 7.3%, the low to middle ranges will increase by 6%, the middle to moderate 5.4%, and the high price ranges 4.2%. So overall, the lower price ranges in the US will increase more strongly, the higher price ranges will increase more slowly, or at a slower pace. Another little quote here from Ivy Zellman of the Z Report. From our perspective, additional inventory is a good thing. However, home buyers dislike uncertainty more than most things. And the transition period from inventory being too tight to inventory rising has indeed added uncertainty to the marketplace. And that's what I'm experiencing. September, October, November, December, there seemed to be a lot of uncertainty because I've been through 2 other transitional markets, and that time where things start changing is a time where sellers are still caught up in the past and buyers are worried about the future. So buyers are living in the future what they think or fear it's going to be, and sellers are still stuck at where it was a few months ago. So that's the hardest time, that transition point, because it's too far apart. Now, as the market's normalizing, the two sides are getting closer to each other. So that's what I'm noticing in the marketplace. Now, inventory is continuing to die down. The number of single-family listings in June of last year was 1.7 million listings across the U.S., and it's been steadily decreasing. Today, actually as of December, it was 1.3 million. So it's a 400,000 number of inventory decrease of active listings right now versus back in June. So that's part of what's, I think, fueling the marketplace. So here's another little thing. Percentage of Americans who believe homeownership is a good investment. In 2016, 59% thought it was a good investment. 2017, 60% thought it was a good investment. And 2018, 65% think it's a good investment. I know for a fact there's nothing better to invest in than real estate. Whether it's investment properties, homes, anything. You buy and hold, you can never go wrong. I think the average appreciation in the U.S. overall is about 9.2% annually if you amortize it with the ups and downs of the marketplace. My only regret in real estate, and this is really being honest, had I bought all of the listings that I did not sell over the last, not a lot of them, but over the last 31 years, I would not have to work today. I'll give you just one specific example. I had an 8-unit apartment building 20 years ago in Silver Lake that I could not for the life of me sell for $349,000. 8-unit apartment building. And I kept thinking to myself, these buyers were offering $335,000. I mean, think, an 8-unit apartment building for $335,000. And the seller wanted $345,000. I was a listing agent, and I finally said, you know what? These buyers are so short-sighted. It had low rents, it needed some work, and so we bought the building. And here we are 20 years later, the building is worth well over $2.5 million. We just paid off the mortgage this summer, so we own it free and clear. And that building that had a $33,000 a year income back in 1999, I think we bought it, or 1998, now has $125,000 a year income, and we own it free and clear. So again, my only regret is I only wish I would have bought more of my listings. Anyways, that's just some advice. So buy and hold, buy and hold, buy and hold, buy and hold. That's my advice. And if you're buying a home, it doesn't matter if prices go down 5% or 10%. It's your home. You're going to live there. And the bottom line is rates are not going to be where they are forever. When I started in 1989, real estate interest rates were 16, 18%. Today they're at 5%. So look at the difference. Home mortgage interest rates, home mortgage payments, this is interesting. During the last housing boom in 2006, the average mortgage payment in America was $1,275. After the crash, it dropped to $550. Today, in 2019, the projected average mortgage is $963 a month. So we're still lower average price mortgage today by almost 40% than back in June of 2006. So that's if you're going to get a mortgage, don't wait, even though prices may go down 5 or 10%. Going from 5 to 7% in an interest rate is like a 30% increase. Just do the numbers, and I do this with clients. I say, look, if prices go down 10%, which we don't predict that, but if the mortgage goes up 20% times that mortgage payment of 15 or 30 years, it's a huge difference. Okay, Freddie Mac, a little quote from Freddie Mac, and we're almost done. Total home sales are expected to slowly regain momentum, increasing to 6.09 million in 2019 and to 6.14 million in 2020. For 2019, we expect home sale growth to be mostly driven by existing home sales, while newer home sales expected to be almost flat. So newer home sales seem to be slower than before. Oh, we were just talking about interest rates. So in the 70s, the average rate was 8.8%. In the 80s, it was 12.7%, but I remember 89, 17%. 1990s was average of 8.12. In the 2000s, it's 6.29, and today it's about 5%. So historically, we're still the lowest rates in 45 years. So what are you waiting for? It just doesn't make any sense to wait. What else do I have here? I think that's it. That's all the charts. So in closing, God, I told you it was going to be a long video, but there's a lot of valuable data here. And this is not the headlines. This is not salacious writing. This is real local data. What happened last year? What's happening the first couple months of this year? What's happening nationally? What are the projections of the people on the street? What are the projections of the chief economists? What are the projections of the people that follow and track the data? I'm here to be your expert to help guide you through the process of buying and selling. 31 years, I know my stuff. And I study this stuff and I go to conferences so I learn more so I can help you make the correct informed decisions. Don't read the headlines, read beyond the headlines, or talk to myself or talk to an expert in your area when you're ready to buy or sell to really have them help guide you through the process. Buying and selling home is a very emotional process. It can be hard to make a decision sometimes. That's why you hire an expert like me to help guide you through the muddy waters of buying and selling real estate. Thanks for watching. I'm always here to help you in Los Angeles and Beverly Hills. It'd be my pleasure. Give me a call at 310-777-6342 or check out our website, ChristopheChoo.com, or our real estate app. Just go to the Apple Store or Google Play Store and type in Christophe Choo. You can download my app and get all the latest information on real estate, active listings and sales in our marketplace. Thanks for watching, everyone, and I'll see you at my next market report next month. Take care.